Hello, everybody. It's Bob Anderson, and I want to do a quick video about this past trading week. It was so miserable and uneventful that I literally had nothing to post on YouTube all week. I mean, it's just what last week ended up becoming is a survival skills week. If you were even going to step into the market, I want to point something out. By the way, no trade is a trade. It's a decision not to be in the market. Um, every day last week, I stepped into the market. I had probably, shoot, I don't have my statistics in front of me. I had probably 3 days that I lost money. And when I say lost money, I mean negative commissions plus maybe $50 or something. And it's just like, I'm done. I had like 3 days. And then I had a couple days. I think Monday I made money. And I think Thursday I made money, but not much money. So my net position on my accounts that I'm trading for the week of January 22nd through January 26th was plus $320, I think, an account. Um, Not much, but what I want to talk about is how the old Bob Anderson would have blown the accounts. The old Bob Anderson would have blown the accounts because I wouldn't have put in perspective, some of the things that I want to talk about right here. Um, One thing that I'm not one for watching the news. I'm not one for, you know, any of that stuff. But, one of the things that did come to my attention, as the week went on is that, we had hit in the market, an all time highs in the ES and Dow, that kind of stuff. And I think that is the main contributor to what is going on right now. I'm going to show that a little bit on some daily charts in a minute with the YM and the ES and the RTY, where basically you use this thought process here. When the markets approach daily highs, not daily highs, all time highs, unless there's some huge news event going on that would cause them, to fly on through, which there isn't any. As a matter of fact, I argue the only reason we're at all times highs is because we depreciated the dollar by 50% in the last 3 years. If those of you know what I mean, you know what I mean. I mean, a Dow at 30,000 is really like a Dow at 15,000 when you depreciate the dollar by 50%. Now it's 30,000 again. So, anyways, my point in all this is that it's like Bob, the coder who works on some of my stuff, brought up a good point. He says, it's like throwing a rock in the air. If you throw a rock in the air, the momentum of that rock going up is faster as it leaves your hand than it is as it gets to the peak. And then when it gets to the peak, it has that moment where it stops in suspension, in the air, and then it starts coming back down. And when it comes back down, it's again same concept. It's slower as it's coming back down, and as it comes down faster and faster. That analogy is very similar to what's going on right now, I think, in the stock market, and that is the markets run up to the um, the highs, and the buyers, the long positions, don't um, don't want to buy more because they don't want to be. Nobody wants to be the last guy to buy, and the shorts don't want to get in front of the freight train. So the market's just sitting still, like it's looking for its next direction. Is that next direction going to be a breakdown to give the market some reprieve, or is it going to be some kind of blow up, which I contest probably would be rather temporary, and then rollover? Not because of anything in particular, but just in general. Because the fact that it stopped and going sideways right now makes me feel like we're just here because we have no other idea where we should go as a market. So I feel that knowing that the market has reached these highs and therefore we're in that rock suspension moment, that we're really in a time where it's really difficult. You go back and look at your charts, you'll notice that even most of the movement that even happened during the day, if there was any, say in the NQ or the RTY, if there was any movement at all, seemed like it all just happened pre-market. When I say pre-market, I'm talking when the European market opened. I'm not talking pre-market at 8 o'clock in the morning. And so, and then of course we would have our 2 times a week, 2 times this past week, we had, employment news, and we had inflation news and whatever, or GDP news, which that was all BS. A 3.3 GDP growth. That's insane. Absolutely not real, but hey, fake numbers are good. And market would just kind of react to that, and then again have no direction off of it, because I don't think the market even believed the numbers. So without believing, I mean, if the U.S. economy really had a 3.3 GDP growth, then the market should be taken off. It shouldn't just be going sideways. So, anyways, that's why I don't think even the market thinks the numbers are real. But on top of that, so what did I do? Well, to survive when I wouldn't have survived in the past. Well, the first thing I had talked about this prior. I have focused on overnight open trades and 5-minute red line trades, but I have not only focused on 5-minute red line trades and overnight open trades. I have only looked at 5-minute red line trades off of in the direction of the overall market. So if price is north of the overnight open, then I'm only looking for 5-minute red lines long, if I'm taking any. And I was just getting my head beat in even by being that selective. So, I started looking for piercings of the daily high and pullbacks into the moving averages for trades. I got as creative as I possibly could to look for trades. And finally, I just said, forget it. Forget it. Forget it. The day would go on and it would just go stale. And so here's what I'm talking about. If the market is not, so item number one to survival is if the market is not flowing in conjunction with your strategy, whatever that strategy may be, then you will not force it to change. And that is the maturity that I think I showed in myself this past week. Is I'd hit a failure, lose like say $150. I would, hyper focus on how to get that $150 back if I could. If not, then I let it go. But I selectively chose where to make that money, and I found that making it in gold and in oil was the best thing for me last week. If it wasn't for oil last week, I probably wouldn't have made any money, because the equity markets were just terrible, and it's not like oil was really good, but oil did have some movement to it. And this right here, this second one right here, is exactly how I made money last week. This second part, and that's this. Okay, so it's probably best if I try to draw a picture of what I'm talking about here. Okay, it says when you're in a winning trade, then bigger targets is a must. I mean, when the market is not contributing, when the market is not, when your pivots are not working, when your rotations are not working, when your moving averages are not holding the way you're anticipating them to, then mentally, ironically, I find you have to trade opposite of what you would think. And here's what I mean by that. If the market's flowing and hitting moving averages and hitting targets and flowing and hitting moving averages and hitting targets and that kind of stuff, you can afford to take a trade and then hit a target, and then price comes back and hits the moving average again, and you can take the trade again, hit a target, and then price comes back to the moving average. I mean, you can afford to do that multiple times because the market's working. Okay? Because the market's working. But when the market is not working, when it is not doing the things that you expect it to do or you want it to do, you need to feel you need to spend a moment of of solace and feel excited that you're in a positive trade. Okay, when you are in a positive trade, and you need to figure out how to bleed this stone for more money. And I had a conversation on, I think it was Monday this past week, with a trader. I think he was out of Ohio, and um, he and I actually got into a detailed conversation about this one thing. So let's talk about this for a second, okay? So let's go back to this. Let's get rid of this stuff here, and let's talk about this. So what I was telling him about, and he recognized it, like he knew what I was talking about. But if you have a, like, say, hey, say this is your overnight open right here, and this is your 5-minute red line right here, flowing up, okay? And you have, just for conversational purposes, let's just say your daily high is right here, okay? And then price rolls up, you know, price rolls up. I'm going to have a point to this in a minute, and then we'll get to this, and then we'll do. Okay, and price rolls up to there, and then price pulls back to your moving average, and you've created a daily high. Okay, this is the most important one. You've created a daily high, okay, or a daily low. So now the market has shown that it's intending to hopefully go. It's pulling back and it's intending to hopefully go to new highs. Okay, and let's just say you take this trade right off the break of this candle right here. Okay, that candle closes, and you take that trade right there, and you get a candle that does, say this, and let's just say, and so now you're like, oh crap, good, this is good news. I mean, I'm going in my favor. Now, when you're having bad trading days, what do 90% of traders do? And I've been guilty of it for years myself. Okay, what do traders do? Traders have a tendency to take their target, say here, and bring it down to say here, and just look for a profit. Okay, I'm guilty of this. Okay, so I'm not criticizing anybody, but let me point something out. So you have a market that hasn't been cooperative. Okay, it's just, so you're not getting these setups routinely throughout the day like you do when the market's oscillating and giving you, multiple daily highs and hitting your pivot lines and taking off, and hitting your pivot lines and taking off. It's not one of those days where you can just hit $200 trades over and over again. And you're sitting here looking at this, and this thing slightly pierces this, which is your new daily high, and you have your 1 minute gold line. Okay, let me think how this 1 minute gold line works. You have this 1 minute gold line, like, let's just say, I'm going to just say it's right here and it's starting to go up. Okay, so that's your 1 minute gold line. Now look what happened. Price came down through that 1 minute gold line, hit your 5 minute red line, rolled up north of your 1 minute gold line again. And this is what I told him. I said, if you see price pierce this candle over to your left, which is your pivot high, okay, your recent pivot high, the one that got you into the trade from the pullback, I said, I said, you need to look at this 1 minute gold line to be your new support. When you blew over the top of it, and price is sitting above it, and it's pierced your micro pivot here, when it's pierced it here, when it comes back, what should happen is that this should come down, hit in there, and then price rotates back up again. Okay? And that micro swing from price crossing back over that 1 minute gold line, piercing your candles to the left, coming back and sitting on top of that candle, and then rotating up. That is what takes your winning trade from, say, $200 to $400. And that is exactly the trade. And I'm going to see if I can find it on my chart today and show it to you. But that is exactly the pattern that I calmly allowed myself to let play out in oil last week that made me my money for the week. That exact basic scenario where price blew up over the 1 minute gold line, and the 1 minute gold line was racing to above your 5 minute red line to hold that price north of your 5 minute red line, because you got your break even, say here. Okay, no sense in taking a loss, but you got your break even sitting there. And it allowed your shorter term moving averages to get involved and support the trade that you're in. See, one of the things you got to recognize in the fact that you finally got into a winning trade is that winning trade is showing the signs that it's pushing price to a new area. How is it showing you the signs that pushing price to a new area? Because it pierced this pierce on that pullback. Once again, it's the same piercing that you're looking for when you get into this trade. It happened here. So now it's going to seek support to then rush it through that area. How many times have you guys seen that scenario? I'm going to show you a couple examples today. Anyways, so what I ended up doing to keep my week, two things. One was to just, market's not doing the things I want it to do. Stop trading. Just stop trading. Just stop trading. If the setups look beautiful and it's not doing what you want it to do, then don't trade. You're not going to make the market do what you want it to do. Secondly, if you do get into a winning trade and the market is not being cooperative, don't shortchange yourself on that trade just to have a profit on that trade. Because then when that trade goes from here to here and then up, I think I actually took that thing up for $600. I don't remember off the top of my head right now, but I do remember it ran up, and I kept following the bottom of the candles after. And that is what that pattern right there, once it pierced this and then came down and then went up, that pattern right there is what made my week last week profitable at all. So anyways, that's kind of what I want to talk about here. I'm going to show a couple examples on my charts here. I'm going to take screenshots so I don't have to look left and right on the charts, and we'll go from there. So hold on. All right, so I'm going to redo the second half of this video because my darn screen thing was sharing the wrong screen. So, anyways, what I wanted to show is like on my ES chart. If you'll look, you have Thanksgiving time right here. See, the market didn't do anything, and then we got past Thanksgiving, in between, early December and Christmas, we had a lot of movement there. This is the ES. And then once we got past that movement, we got to Christmas time. See, these are Christmas. Market didn't do anything. Once Christmas got over, started moving again. Then we got into this dormant phase right here, about the 10th or 11th of January, sideways. Market double topping. See how it's double topping right here? Then it went down and it blew through it, and then it's same thing. It just stopped. It's just been sitting here going sideways for the last, few days, which was last week. I think it's even more extreme to look at in the where is it? In the YM. Well, let me just pull the YM up here. Heck, I'll just put the YM right on this chart. There you go. Can it get any more dramatic than that? Here's the Dow. I mean, look at this. You had that spike up last week, and then, 2 weeks ago, and then boom, last week. Nothing. So when your market's doing nothing, it's very hard for trades to be entered in rotations and stuff like that. It's just, this type of market movement from here to here, or even from here to here, creates nice rotations of crossovers, pullbacks, and continuations. That's what you're looking for: crossover, pullbacks, and continuations. Well, those things are all rewarded when the market's doing this or doing this. When the market's doing this, there is no crossover, pullback, and rotation because the market's not going anywhere. So, anyways, this was just terrible. So, anyways, I bring this up because this is the kind of stuff that just killed me last week. Is that the market had no movement. In gold, for example, at least gold through the holidays, this was gold. Just look at these rotations on a daily basis. These are daily charts. So this is daily, but you can see while gold's doing all this crazy ass stuff all the way through the holidays. You really saw no laying around. It was up and down, up and down. So you're getting rewarded from rotations. But then here's where gold is the last week. So it got pretty dicey. Let's just for fun, let's pull up oil. These are daily charts. So let's see. Let's just pull this one up on oil. So see, in oil, let's look at last week. Why did oil probably give me the most reward for my money? That's why right there. Because at least oil was moving. It was moving in a direction during the week. This is, these are see here. Here's Monday, Tuesday, Wednesday, Thursday, Friday. Okay. And it's gapped up for Sunday night. But anyways, market's moving. Didn't do much moving in here, but it's moving here. And if the rotations and the pivots are not working, then you probably don't. You probably need to not be forcing trades. Is the point of my conversation here. So, perfect example of when you know that things are just not working is like this. I'm going to put this chart up here. This is an oil chart, but it's just an easy one for me See how we have overnight open here. Price, I don't remember what day this was, but price ran up. This is recent, by the way. This may have been Friday. Uh, $77. Yeah, this was Friday. This was Friday, I'm pretty sure. So price runs up, creates new daily highs, and then rotates down right into that 5 minute red line, which is rotating up, like I talked about, as being, you know, the time that is probably like the best possibility. And then all of a sudden it just went up, hit the bottom of that 9 EMA 1 minute candle. See how it hit the bottom of it right there, and then just rotated down right back to the overnight open. There's no trade in the overnight open either. You can tell the overnight open is dead from looking over here to the left. There was no direction off of it. So this ended up being a loss. It just, if so this is an example where price goes, everything does exactly what you would hope for. You get a new daily high. It's, mid-morning, it's like 10, 11 o'clock. Price pretty much rotates down. It's pretty straight to the 5 minute red line. You're north of the overnight open. I mean, longs are all the thought. And you hit and you go straight into the bottom of that 9 EMA, and it just collapses down. It's just not a trade. I don't know. The trade, no matter how perfect everything can be, trades can still lose. I mean, that's just a fact. But anyway, so let's talk about the one trade, for example, that I talked about in the video, that I said, well, because I'm going to show you a repeat of the same trade. So this is oil, okay? This is a repeat of the same trade that I just talked about. So you get 10 o'clock. You crossed your overnight, your 5 minute red line here. Price goes north of the overnight open. Okay. So all I'm thinking about is, I got all my buttons off. I'm thinking long onlys. So I got shorts off because I'm north of the overnight open. I'm looking for a 5 minute red line north of the overnight open. And so I'm looking for that. I'm looking for that trade because I don't have a cooperative market. I'm being very selective on what I'm looking for. So what ended up happening on this trade? Well, this was kind of a unique situation because the market lagged quite a bit right here. See how it just sat there for quite a while? I mean, this is from 10:30 to almost 11:30. So almost an hour it went sideways. Now, the interesting part about it taking an hour going sideways is there's certainly no trading in a sideways market. I talk about that all the time. But what this lag here did is it created time. And this is important. The 5 minute red line is slower than the 5 minute gold line. The 5 minute gold line is slower than the 1 minute gold line. It created time for the 5 minute red line to catch up to price. Okay, and here's a touch one of your 5 minute red line, and it just came straight off. I mean, straight off of a daily high. Okay, price rotated down. Boom, your long is right here at 74.45. 74.45. Okay, that's a pretty good number, 74.45. When you think, I don't know, maybe it is, maybe it isn't. I don't know if that means anything. But what I want to point out, let's go back to putting the 1 minute gold line on here. Watch this. So let's go back to the example I just showed you where price came up, ran into the back of that 1 minute gold line, and then collapsed, right? So remember, support becomes resistance, resistance becomes support. So we trade based off of the fact that in overall terms, the 5 minute red line right here should be more powerful. Odds are in our favor than the 1 minute gold line. Does it work that way all the time? No, but that's what the intent is. So trade comes down, it sits, and then Boom, you're long at 74.45, and then it hits straight into that 5 minute to that 1 minute gold line. Now, here's the best part about it: it went through it. It went right through it. Didn't even slow down. It went right through it. See, price goes right through it. Well, once it does that, now we're back to the scenario I was talking about over here. Now we need to look at price having support from that same line. Okay, we need to look at price to have support from that same 9 EMA, that 1 minute gold line. So what happened? Price came up, and instead of just taking your 745 to 757, I guess $100, instead of just taking $100 and calling it a day, it came back, sat on that gold line, and then rode that gold line up. Now, here's the interesting part. So when I took this trade, I had my target. Just going to tell you how I had my target right here. Okay. I had my target with the intent of it going back to the pivot high. Okay. So let's see here. What was that at? 74.79. So let's see here. 74. I think I got filled at 46, by the way. So 49 and 79 and 40 is that's what's 33. So 33. So $330. Not a bad per contract. Not a bad trade. $330. Okay. But what I saw with my target sitting here is I saw price doing the same thing, was creating this huge gap here from the gold line. It was running away. Okay. And I saw these candles just going in straight lines. And I grabbed my price, I grabbed my target, and I threw it up here just in case it spiked. Give me $200-300 more if it just spikes. And then what happened is it went through, created this, hammer candle, and came back down. And now at this point, I'm like, okay, let's stay calm. Let's stay calm, and let's hope that our 9 EMA holds. So, I still had some money in here. I don't remember where my stop was. It certainly wasn't at break even anymore, but it was somewhere. And then this thing rotated back up through the highs. Now, why did I do this? The key reason I calmed down and let the market trade, the key reason I calmed down and let the market trade was that I finally was in a winning trade. It was one that I feel very confident in because I'm in the right direction with the market. I'm in the right direction with the overnight open. I'm in the right direction with the 5-minute red line. And we broke new highs again, okay? As we would hope would happen over here. If this never eclipsed those highs and started rolling over, then we got a problem, okay? But the fact that it eclipsed the highs and came back into the 9 EMA, it's like we got hope. We got hope and solace. We got a chance, okay? So I'm looking to try to make a decent amount of money because the market is not cooperating. So this thing rotates up. As soon as this candle right here, these two candles here, but this one in particular, as soon as this one got pierced by that candle to the right, my stop was right here, right here. I was not going to let it go z and then z. Okay. And then it rotated back up through the high again and just kept going. Now, I ended up closing it out at like 60 ticks. So right up in here, 46, 96. No, is that 96? No, it's 50 ticks. I'm trying to remember where it was. It was somewhere up in here because I followed the candles. It was somewhere up in here. I got knocked out. I don't remember. It was $500, $600. I don't quite remember. But here's the interesting part. Watch this. So you got your 5-minute pivots, right? Here's your 5-minute pivots, your 5-minute pivots. Look at what it actually did. Not that I could do this because I don't trade this way. I'm impatient. I've talked about this. I'm very open about the fact that I'm not a patient trader. So look at what the market actually did. Keep following these pivots. 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 keep following these pivots, and it goes right to here. Now, what is that price? It's $75.45. Well, actually, it went to $75.46. Now, the entry was $74.45. Does anybody find that coincidental? I don't. I don't find that coincidental. The bigger traders that understand, that are more patient and are more willing to take that 1 to 2 trades a week for bigger targets and whatnot. This is what they intended when they saw that rotation. This is what they took. They took this for $1. So when it pierced through that 75.45 number to the 75.46, that's when they were all closed out. And then what happens after that? When the market makers get out of the market, take their profits, this is what happens. And it's all over. So, anyways, I'm not talented enough for that. Okay. I don't have that kind of gumption and whatnot. Maybe someday I'll get there, but I'm not there today. But I did at least allow myself to rotate up further, somewhere up in this area, to get myself $500, to not allow myself to get scared out at $100, $150. And when I finally had a trade going in my direction, but to allow that 9 EMA to work the trade for me, to keep me in the market to the rotation that I needed. That is what I see as my next development phase of my trading, is how to take some of these specifically 5-minute red line trades and specifically overnight open trades to allow them to maturate to the profit numbers that they really deserve and that they create on a relatively routine basis, given the power that both these lines have in my trading strategy. So anyways, that's what I wanted to show everybody. I going forward for the next week, I'll probably be still trading commodities. I don't know that I'm going to spend too much time focused on the equities until they decide if they're going to go up or they're going to go down. Up, I know people watch the news and they say, well, they say the market's going up. Yeah, up is a direction. The problem is not the amount of up. I mean, and I think the Dow closed up 40 points on Friday. I mean, you can't trade in that. But anyways, so this is the kind of stuff I'll probably be focusing on, is oil and then gold. And then I'll wait till the equity markets start coming back before I start putting some money into my trades there. Anyways, everybody have a good day. Sorry I had to do the back end of this video again. I screwed up the front end in my taping. I'll talk to you later. Bye.